Most people think The Wolf of Wall Street is a movie about excess, cars, money, power, fast lives, wild parties, bad behavior. But that's not the real story. The real story is much simpler, much quieter. One phone call, one bad incentive, one broken system. Jordan Belfort didn't break Wall Street. Wall Street rewarded him. This is not a movie recap. This is the real scam behind The Wolf of Wall Street. And once you understand this scam, you'll start seeing it everywhere. Jordan Belfort wanted money, not respect, not innovation, not long-term success, just money. He didn't dream about building companies. He didn't dream about changing the world. He dreamed about getting rich, fast. In the late 1980s, Wall Street was changing. Trading floors were louder, competition was faster, regulation was slower, everything moved quickly, and speed mattered more than accuracy. You didn't need to understand companies. You needed to convince people. If you sounded confident, people believed you were smart, and Wall Street paid very well for confidence. How brokers were paid. Here is something most people don't know. Brokers were not paid based on client success. They were paid based on how much clients traded. More trades equals more money. It didn't matter if clients won or lost. This changed everything. Advice became sales. Sales became pressure. Pressure became normal. A broker could lose money for clients and still get rich. When rewards are disconnected from results, bad behavior feels harmless. The door nobody watched. Most big banks focused on large companies: Apple, IBM, Ford. These companies were watched, analyzed, regulated. But there was a forgotten corner. Penny stocks, very cheap shares, very small companies, very little information, almost no public attention, and almost no supervision. This was the door Jordan walked through. Penny stocks usually cost less than $5, sometimes less than $1. Because they were cheap, people saw them as opportunities. If this goes from $1 to $10, I'll be rich. That dream is powerful, but cheap stocks are easy to move. A few phone calls can push prices up, especially when no one is checking. Price doesn't always move because of value. Sometimes it moves because of noise. The simple scam formula. Jordan's system was very simple. No advanced finance, no complex math, just repetition. His firm bought penny stocks very cheap. Brokers hyped these stocks on the phone. Clients rushed to buy. Jordan sold at higher prices. That's the entire secret. Nothing magical, nothing innovative, just selling faster than the truth. The sales scripts. Jordan didn't tell brokers to explain businesses. He told them to control emotions, fear, greed, urgency, limited opportunity. Smart investors are already in. Don't think too long. The goal was not understanding. The goal was speed. If clients hesitated, the script pushed harder. Thinking was dangerous. Action was profitable. Why people believed him? Clients trusted voices. A man in a suit sounding confident felt safe. Most clients didn't understand stocks. They didn't know how markets worked, so they trusted confidence instead. And confidence is easy to fake. Jordan understood this perfectly, where the money came from. Here's the key detail. Jordan did not get rich from good investments. He got rich from commissions. Every time a client bought or sold, money flowed upward. Even if the stock collapsed later, clients lost money slowly. Jordan got paid immediately. Pain was delayed. Profit was instant. Incentives create behavior. The system rewarded one thing: activity. More calls, more trades, more pressure. When activity pays more than honesty, honesty disappears. Jordan became rich because the system encouraged it. The problem with loud scams is attention. As money increased, Jordan became louder. Expensive cars, public attention, ego. Quiet scams survive longer. Loud ones don't. Clients complained. Journalists asked questions. Regulators started watching. The same confidence that built the empire made it visible. Cracks inside the machine. Pressure works both ways. When risk increases, people protect themselves. Employees cooperated. Phone calls were recorded. Evidence stacked up. Jordan tried to keep control, but systems collapse from the inside. Arrest and prison. Eventually, authorities stepped in. Jordan was arrested. His firm shut down. The phone lines went silent. He was convicted of fraud and sent to prison. The wolf fell. The story seemed over. But the real lesson was just beginning. Jordan Belfort went to prison. But the incentives that created him, they stayed. Different decade, different platforms, same structure. Whenever money rewards selling over truth, another wolf appears. Today, it may not be penny stocks. It might be hype, trends, promises. Why this matters to you. This story isn't about hating money. It's about understanding systems. If someone gets paid when you act quickly, ask why. If pressure replaces explanation, pause. The most dangerous scams don't look like scams. They look like opportunities. If this video helped you see money more clearly, subscribe, not for drama, but for understanding. Because once you understand incentives, the scam loses its power.